would say so as well. I welcome M.R. Venkatesh, political analyst, lawyer, very good in macroeconomy. Professor P.K. Basu, chief economist of ICICI Securities, author of Asia Reborn, fantastic voice on the big picture. Sohail Seth, managing partner, Counselage, and India's #1 brand guru. Sumit Mehta, very well-known, respected chartered accountant. Professor Dipankar Sengupta, he's a researcher at ORF and a professor of economics in Jammu University. I'm also joined by Ashish Wakankar. He's founder and CIO of Equipoise Capital. He knows, the way in which the economy has come out of the devastation of last year. Karan Bhasin, economist, completing our panel this morning. We're going to start moving to our guests. Quick round from you. Professor Basu, to you first. You know, we're all bright up and early this morning. Even if the temperatures are low, I think the excitement is high for this budget because it's a budget that we worked hard for. It's the second budget since the pandemic hit. It's the budget in which we have to make a point. It's the budget to tell the world that, and of course the lobby that you wrote us off.
Yes.
But here we are and back, and how? It's not a question of relative recovery. It's about a booming recovery. And I think, especially after, while we are getting towards, hopefully, the ebbing of the third wave, there's a message to be sent. What's the message to be sent today?
Well, the message is that there's enormous amount of fiscal space. If you look at the numbers from April to December, the full year revenue target has almost been reached. 95.4% of the revenue receipts expected for the full year are already in by December. So we're going to have a very strong fiscal performance, which basically provides an enormous amount of space for the finance minister to use that fiscal space to do whatever she wishes. She can either lower some tax rates, she can boost spending, particularly capital expenditure, which is a key need of the economy at this point. It creates an enormous amount of fiscal space because the revenue performance has been absolutely spectacular this year. Every kind of tax revenue has gone up sharply. We've seen an increase of revenue from corporate taxes, from income taxes. They are way above the levels of the pre-COVID year. So given that, there is a tremendous amount of scope for improvement on that, and scope for the finance minister to do what she wishes with that fiscal space. Apart from that, of course, the fact that revenues are so strong underlines the fact that the economy itself is doing extremely well, which is why you have such a strong revenue performance. Revenue comes from strong income growth, from corporate profits growth, from very strong GST revenues, which are growing strongly primarily because of a recovery in the consumption space. Now, consumption is the one area that hasn't grown quite as rapidly as the rest of the economy. Investment has started picking up strongly.
Yeah.
And all of that is contributing. And of course, last year was India was the world's fastest growing exporter. Export growth last year was nearly 42%. In the calendar year, India's exports did far better than anyone else in the world. China's grew only 29.9%, India's grew 41.6%. So that's goods exports, leave alone services. Services exports are doing very well, but goods are doing spectacular.
You know, Professor Basu, I think a lot of people who want the booster and who are not getting it, thanks to the government's conservative policies, have got obsessed. They keep saying, this is the booster shot. This is the booster shot. Will we get the booster shot in the budget? I tell them just wait for the government to open up a little bit. But everyone, Sohail, is calling it the booster shot, the new normal. I mean, these COVID terms have just penetrated our discussion these days. We just keep talking, Ashish, in terms of booster shots. Now, this particular budget is on the back of a pandemic. It's ahead of a big election. So I want to see how the finance minister will manage the competing demands from various sectors. You know, I want to see what the new normal will be. And I want to see how India will interact in the world where COVID is the norm. Ashish, over to you, Ashish. Expectations this morning.
So No. So the point I want to make, and good morning to everyone. The point I want to make is this is not a booster shot. So this is, I think, a misconception. If you look at what happened during the global financial crisis in 2008, 2009, global central banks got together and gave a booster shot in terms of the economic stimulus. What resulted as a function of that was huge inflation. This time around, again, when we had the pandemic, the global central banks got together. The only difference this time was the Indian government moved away from the conventional path and the others followed. So consumption was definitely not the focus of this government. This government focused on investment-led growth. And though it is an arduous path and it's a long-term path, they decided to take it rather than giving protecting the weaker sections of the society, the MSMEs. That's something that the government focused on. But consumption-led growth is something that they moved away from. Investment-led growth is, and that's exactly what PK spoke to us about, a couple of minutes back. That's causing the economic growth.
Okay. Well, those are pictures there. Those are live pictures from the Finance Ministry. It's always an early morning in the Finance Ministry, isn't it, Abhishek, on a day like this? Pictures at South Block, Minister of State for Finance coming in, Nirmala Sitharaman coming in. So viewers, if you're watching this right now, let me tell you, as you expectantly wait for the budget to be rolled out this Tuesday morning, this budget morning, let me take you through what is set to happen. There have been 73 annual budgets so far, 14 interim budgets and 4 special budgets or mini budgets, what we call mini budgets since independence. But the important thing, Abhishek, is that this is the 4th straight budget presentation by Nirmala Sitharaman. This is her 4th straight union budget presentation as she presents the budget for fiscal year 22-23. And so viewers can just go through, Abhishek can tell us through what's going to happen today in terms of sequence of events, the process, Abhishek?
Arnav, yes. So, I mean, I have seen, and you would have also noticed the overall evolution of Nirmala Sitharaman also as finance minister over the last 4 budgets, the erudition and the confidence with which she really carries herself now. And today, of course, she leaves her residence, comes to the North Block. There would be that customary picture with all the bureaucrats involved, the secretaries of the Ministry of Finance,
yes,
and the officials who were part of the budget making, including the principal economic advisor who essentially wrote the economic survey and the new chief economic advisor. Then there is this traditional visit to the president, because obviously president is the head of the parliament, and the budget is discussed with the president. Then she comes to the Parliament House, where the budget is presented to the cabinet, following the approval of the president, and then the cabinet approves it. And then, of course, she moves to the hall of Lok Sabha, where the budget would be presented, where it is presented. Before that, of course, as she enters the parliament.
So she's having an early morning.
Again, customary picture.
Having an early morning, 8:20 viewers.
The brown bag.
Yeah, and let me tell you, at 10:10 a.m. before the budget, there is a meeting of the Union Cabinet, which is held at 10:10 a.m., and that is for the formal approval of the Union Budget 22-23. The budget presentation itself, after the approval of the Cabinet, the Union Finance Minister will present the budget, that she'll begin presenting the Union Budget 22-23. That's sharp at 11 a.m. As I said, viewers, this is the 4th straight budget of Nirmala Sitharaman. This is the 10th budget of the Modi government. This is going to be the 10th budget since the BJP came to power in 2014. It's a paperless budget. Lots to prove. What is there to prove in this? What are people looking for? What will it bring the focus back to? Will there be some massive announcements on farmers? The economic survey said that the agriculture sector, quote unquote, experienced buoyant growth in the last 2 years. These were also the years which were marked by blockades in the name of farmers, protests. So this is the first budget post the repeal of the farm laws. Will it put the focus back on finding newer and more novel ways of uplifting them? Will it lay down the revival roadmap? Expectations next with Sohail Seth. Sohail, over to you.
I generally believe, people have been talking, you alluded to the fact that there's going to be a booster dose. I think it's going to be the second shot. The first shot was when the government showed, to my mind at least, a great deal of empathy by telling people in industry and outside industry that the government will help them owing to the ravaging effect of the pandemic. I think two things are going to play on Nirmala Sitharaman's mind. Number one, how does this second dose insulate people from further misery? And number two, remember, the elections in India's largest state are coming up. That will also weigh on her mind. My worry, Arnab, is that it will again be a budget where perhaps the rich or perhaps industry may be taxed heavily because the government also needs revenue. Now, to my mind, Nirmala Sitharaman has been a great trapeze artist. She has balanced budgets brilliantly, but this is going to be a real tricky one. How do you balance the fact that India, A, has to be an economy of a certain size, then the fact that the pandemic has had this terrible effect on our economy, and also marry the aspirations of all the programs that this government has taken on? So it's a three-pronged attack or three-pronged strategy that has to be managed.
Absolutely. And Suhail, we had P. Chidambaram cribbing early in the morning. Why does he crib so much, M.R. Venkatesh? Why does Chidambaram keep cribbing, almost cribbing for a living? He's just cribbed on Twitter this morning. I think he's feeling a little left out. He says, on the morning after the economic survey, he says, if you read some newspapers, you will come to the conclusion that there is no opposition in India. Well, there is certainly no Congress in India. And then he goes on to say, MR, even if there is a feeble opposition, it has no views on the economy. What is he missing out on? What is he missing out on, MR? Where is MR? Yeah. What is Chidambaram missing out on?
Yeah, I'm here. And whenever there is a reference to Chidambaram, I don't know why you pick me, but be that as it may. The
entirely
most important thing that I would like to say, you know, but you know, he had his own innings. And he is well past his shelf life. The Congress has no alternatives. They have ruined the country for 60, 70 years, and the people are well aware that there is no way that they want to look at Congress even as an alternative remotely.
Correct.
Coming to this budget, I fully agree with PK and also with Mohandas Pai that there is enormous fiscal space. For the first time, I'm seeing that the revenue targets have been exceeded in a budget, and that is good augury. And that could mean, A, could the finance minister think about cutting the median rates of GST from 18% to 16%? I know that's a long, torturous route. I'm not looking into the process that he has to go to the GST council and all. GST has been enormously buoyant. Why don't you cut it from 18% to 16%? If this is the time, seize it. Second, the personal income tax. These are the people who have been honestly paying taxes all through the years, including the tough years. Cut it. This is number two. The third important point, Arnab, forget all the numbers. One number which gave me enormous satisfaction in the economic survey was that the manufacturing is growing at 11%. That is big news, Arnab. That is big news, because we have been stagnating at around 15% share of manufacturing to the GDP for the last 15, 20 years. We need to go up to 25% if the dream of the Prime Minister to make India as a 5 trillion one were to become a reality. So from 15%, how are you going to take it to 25%? And that should be a very graded and a very calculated one. For that, it requires enormous push, and I hope this budget will focus on industry. Why do I say this? Because that will be your answer to your jobless growth that the people are cribbing. If really economy has turned around and industry has also turned around, manufacturing has turned around, this must be sustained, and this must be sustained by enormous amount of plans and programs, and this is very important that I'm looking forward in the budget.
Absolutely. Very well placed overall, you know. You're talking about the numbers. Let me add another number, the index of industrial production. I think you missed out on that. That grows at 17.4%. I want to bring in Professor Dipankar Sengupta and Nasir Salim, welcome. He's managing partner at Flexi Capital. You know, the IIP grew at 17.4% on a year-on-year basis during April-November 21, as compared to minus 15.3% in April-November 2020. There are some people who say, you know, don't get too excited. The base is anyway too low. But my question will be, can we maintain this momentum without fiscal prudence going down the drain? Can we maintain this momentum without fiscal prudence going down the drain? Nasir, you'd like to take that? Nasir?
Yes, good morning, Arnab.
Good morning.
Great to be back on Republic and great to be back on your show. So, Arnab, very key question on on manufacturing and on IIP numbers and, so obviously one is, of course, the low base effect, which you've already mentioned. But clearly, our expectation as far as manufacturing, some of the employment generation sectors, Arnab, is concerned, are that the government, the budget has to focus on a separate head on employment generation sectors. For example, you said manufacturing, textiles, infrastructure, leather and food processing. You see, today the entire Southeast Asia, and I must tell you the entire globe, is looking at India to change hub from Southeast Asian economies to India. And they want to come into India with big expectations. So I think we are expecting the finance minister to launch a separate head under these employment generation sectors. The other quick one, Arnab, since you mentioned, in my opinion, to kind of boost investments and consumption, I think there are two very important expectations that the industry is demanding. And I'm hoping that the finance minister will kind of dole out on those. Number one, certain incentives need to be given for certain tax incentives need to be given for labor-intensive units. For example, SEZs, coastal zones, industrial parks, if those are set up, and there's a policy guideline that is issued for setting out some of those initiatives, it's going to be a big welcome step for this entire IIP and this manufacturing boost. Number two, a very quick one. You see, this is more to do with personal finance and lending. There are certain incentives for fintechs which should be doled out, in my opinion, for the unbanked population, Arnab. Today, a lot of money is waiting on the sidelines. There is an unbanked population. And in my opinion, there are a lot of automation technology fintech companies which are working very hard, I must tell you, Arnab, to get in, pushing in microcredit. And certain benefits can be given in terms of tax rebates, tax holidays to them. And my last two quick points before I, again to do with personal finance. Consumption and boosting consumption has been a big challenge, I must tell you, on account of COVID. We've had intermittent supply disruptions, Arnab. In my opinion, we need to incentivize home buyers. And home buyers can be done through the current deduction for home loan buyers, which is 1.5 lakhs.
Yeah.
If the finance minister can increase this to 200,000, it's going to be a welcome step. Please understand, I heard some of your panelists mention, I hope there's rationalization on GST, there's income tax reductions. I don't think that's possible. Let's be fair to her. The government is working on a very tight rope as far as fiscal prudence is concerned for FY 22-23, Arnab. And I don't think it's going to be so easy to expect any tax cuts at this.
Now, sir, there are two things I'm looking at as well. You put it brilliantly. So we're looking at things. We also got a couple of breaking news items out there. Viewers, I want to take a short break. When I come back, I'm going across to Canberra and Australia and to Singapore, of course, to our regular segment with Jim Rogers and Raghavendra Jha, who's Professor Emeritus at Australian National University. But before that, getting three bits of breaking news that came in from Abhishek. The announcement of a bullet train from Delhi to Kolkata is one. Secondly, now that's going to be big if it happens. Delhi to Kolkata bullet train. Fantastic. Good for Professor Basu there. He's going to be going up and down every second day. Railways, 100% completion of electrification by 23. Yes, Sohail will also be taking the bullet train. Of course, I forgot to miss you out there. And the capex of the railways increased 500 times since 2014. Hearing about increase in standard deduction for the salaried classes. I'm particularly looking, ladies and gentlemen, at whether the government will end its cryptic silence on cryptocurrency. That's what I want to hear about, and what it's going to do for the startup sector. What is it going to do to accelerate the startup sector? I think these are two priorities of the government which need to be enunciated clearly in this budget. Short break, back in a few minutes. Don't go anywhere. This is the live budget broadcast on Republic. Available on the Union Budget mobile app to provide quick and easy access to all citizens and stakeholders. Remember, viewers, this app is bilingual and it is available both on Android and iOS. There is no traditional halwa ceremony that is conducted. This year, the traditional halwa ceremony in which halwa is prepared and then served at the venue where the budget is presented was cancelled because of COVID restrictions. It's a two-part budget session. This budget session is distributed into two parts in Parliament, spread across 29 sittings, 10 during the first part, 19 during the second part. And ladies and gentlemen, during the first part of the budget session, 40 hours of general time is available for questions, private members' discussions, discussion on the motion of thanks, and a general discussion on the union budget. Big day, big day for Nirmala Sitharaman once again. I would like to go across to get a sense of what we can expect on the taxation front, etc., to Mr. Sumit Mehta. Mr. Sumit Mehta is the author of Diagnosing GST for Doctors, and he's a regular commentator on finance, tax, economy, and corporate law. Mr. Mehta, couple of straight questions to you. How likely is a change in the taxation limits, changes there for the salaried class first?
Thank you, Arnab, and good morning, everyone. The biggest challenge for the government will be to balance the fiscal consolidation, raising the resources, and at the same time offering some relief to the salaried class and the middle class. So I believe that there could be an increase in the standard deduction offered to the salaried class. At the same time, there could be an increase in the deduction under section 87A as well to some extent, because we have got some cues from yesterday's economic survey that there should be some kind of incentive given to the individuals to increase the individual consumption and as a result drive the economic growth of the country, consumption-led growth. So there should be some amount of tax breaks, or rather I can say relaxation coming up in this particular budget for the salaried class.
But do you see the taxation limit being taken up? As some are saying, from 2.5 to 5 lakh taxation limit to about 7.5 lakh for the salaried class. That's going to be very bold. Will that happen?
I doubt, because at the same time, while we are looking at giving some kind of benefits to the consumers to increase the consumer spending, there is a limited legroom in terms of offering a higher deduction, increasing the exemption limits. I believe at the same time what could happen is there could be some kind of deductions under section 80 CCC and all, so that there will be a kind of incentive for the individuals to invest in certain preferred schemes, and a little bit of exemption, deduction in terms of standard deduction and all. But I don't think there is a possibility of increasing the exemption limit from 2.5 lakhs to 5 lakhs. But having said that, if you look into another way, through 87A, government has actually given an exemption to the extent of 5 lakh rupees.
Okay.
So, some way or the other, they will compensate it.
So you're saying they effectively given it, they could compensate it. Quickly go across to Professor Dipankar Sengupta from Jammu. Professor Dipankar Sengupta, this is the second budget in the COVID situation. How different is it likely to be, in your view?
Look, one thing we know about this government, that it has never let itself been hurried into precipitate action. And secondly, if you look at the economic survey, they talk about an agile way of working, which means as and when situations crop up, you basically change your strategy. Look, this government has taken a crisis called COVID and turned it into an opportunity. And it did so, it did not wait for budgets. For example, your PLI, a dramatic scheme to basically boost manufacturing. I think what we will see is the following: as and when things change, schemes like PLIs will be fine-tuned, as the previous speaker said, to ensure that the labor-intensive sectors, particularly textiles, leather, etc., receive a particular boost so that you get more employment out there. But more importantly, we have a booming startup network now. How do I convert that startup network into full-fledged industries? Correct. That operationalization, I think, needs special care where PLI is concerned. If we are able to do that, and I think we will be able to do that, employment will receive a boost. But the other thing people have to forget, people often forget, is the following. You see, consumption will be increased if sectors like transport, if hostels, hospitality, they are let go. Right now, the middle class wants to consume. I remember in the month of October, a record number of tourists came to Jammu and Kashmir when it seemed that restrictions were on their way out. Remove those restrictions and you will see a boom in consumption. I, for one, get the sense the middle class knows that under these circumstances, it's extremely difficult for the government to give some extraordinary tax breaks. And I think that can be postponed. Right now, what we need is basically to proceed on the path we are going. It's been a fantastic recovery. We have to make this a long-term process, and I think that's what the government has been doing, not just in the budget, but in subsequent follow-ups to the budget and subsequent announcements as and when things change.
No,
and
I think on that point you made about entrepreneurship, and this was a great year. You know, we actually added a record 44 unicorn startups in 21, overtaking the United Kingdom to emerge as the third largest country in terms of unicorns. And I think this government needs to do more in terms of budgetary allocations, especially in terms of, say, tax exemptions as far as startups are concerned. From Singapore, I have Jim Rogers. Jim Rogers.
How are you? Nice to see you. Happy New Year.
Happy New Year. Happy New Year. I love the budget day mornings, Jim, because it gives me an annualized opportunity to prove you wrong.
Well,
you know, you're so wrong always. You're so wrong. And you know, you're ever so wrong. And
right. I guess you did something right.
No, you're always so wrong. And it is so wonderful that by pitting myself and many of our panelists against you, we get an opportunity to prove how India is right and Jim Rogers is wrong. I'd like to welcome Dr. Raghavendra Jha, Professor Emeritus at the Department of Economics, Crawford School of Public Policy at Australian National University, joining us live from Canberra in Australia. Professor Jha, good morning. Thank you very much.
Good morning, and thank you very much.
Thank you. What is the world saying about India as we prepare for the budget? My first question is to Dr. Jha. What is the world saying? What are your expectations broadly about India as we prepare for this budget morning?
Well, I think that there are several good things that are happening in the Indian economy. First, as the economic survey made it very clear last night, we have already recouped all the tremendous losses that we incurred because of the pandemic starting in 2020. And we have now a net gain from the pre-pandemic figures in terms of GVA, in terms of GDP, in terms of the outputs of various key sectors of the economy. And at the same time, we have a substantial restructuring of the economy. And the restructuring of the economy is basically going to lead us to a path where the economy can grow in a sustained manner, but on a different track. So please remember that when the economy starts to recoup from the full effects of the pandemic, it will not just be an inflation of the old economy. It will be a new Indian economy. And this new Indian economy is doing well.
Yes.
And it has the potential crippling episodes of the virus.
Absolutely. In fact, you know, the World Bank maintains 8.3% and 8.7% 22-23 as per the World Bank's Global Economic Prospects report. The world is optimistic, but Jim is never optimistic. Is Jim ever optimistic? Do you remember the last time Jim was optimistic about India, MR? Was he ever optimistic about anything but China, which is going down the drain, MR? But Jim is ever optimistic about China.
You have taught me about India. India's stock market last year was fantastic, and the economy. It's all because of you.
No, it's not because of me.
No, Jim,
okay,
all these left-handed compliments. Left-handed compliments won't work. Left-handed compliments won't work, Jim. This is an economy which is booming, which is thriving, which is demonstrating that democracy can deliver. And this is what is telling us that the leadership change in Narendra Modi has made a tectonic shift in the aspirations of the people. Number of unicorns, the stock market is outperforming. The rupee is stable. Jim, you have always been critical about the rupee. The rupee is exactly stable. And that is a big plus point, that in dollar terms, investors are making money. And the taxation rate is more or less stable. It has got definitely some room to go down, but it is competitive. And you see the manufacturing has come back. That's the big news. And if you don't invest in India, Jim, you are the loser.
Well, India, I repeat that Arnab has made India very, very successful in the last year. But part of it, as you know, is a lot of debt. everybody has increased debt and money printing in the last year. Ultimately, that will be a problem for everybody. I'm not talking about India now. I'm talking about everybody. America's worse. America, Japan, much, much, much worse.
No. Yes. That's the point. You look at it, we have not taken the fiscal irresponsibility route. We have taken a better route. Of course, our debt is high, but compared to the world standards, we are one of the lowest. Our household debt is one of the lowest. You don't factor the household budget, household balance sheets. The household balance sheets in every household in India is solvent.
No, the fact is,
investment in houses are all
Jim,
debt to GDP.
No,
we are one of the lowest.
See,
that's the point that you must understand.
See, Jim, you admit first. Today, I want you to make an admission, Jim. Just admit. You lost a golden opportunity to make a gain. You exited the Indian market in 2015. And you still refuse to invest in India, saying markets are at a high. But last year, the India index, you said, yes, I remember. MR, he said last year. Karan, yes, he said last year. He came on my program and he said, oh, the Indian markets are at a high. They're going to tank, they're going to fall. Karan, you remember that? He said last year, he said the index markets are at a high. And Jim, you're so wrong. I want you to admit on India's largest network that you were wrong, because the India index rose 30% last year to new all-time highs and emerged as one of the major emerging markets. You admit today on television you were wrong. That's all, nothing more.
I said it was at a high last year, and it was, and that's why I didn't buy it. Same this year. You've done a brilliant job.
You were wrong.
You made the market go through the roof.
No, I didn't do anything. I didn't do anything. I didn't do anything. I'm going to send you a copy of the economic survey, which expects the gross fixed capital formation of strong growth of 15% in 21-22, full recovery to pre-pandemic level. While India's investment to GDP ratio is about 29.6% in 21-22, which is the highest in 7 years. But the problem is you're not blind, you're pretending to be blind.
It's going up a lot too. That's fine, but somebody has to pay the debt someday.
Well, you just admit today that India got it right. And these are indicators of a great recovery. You made it an ego issue. Dr. Jha is on the debate. Dr. Jha is countering you from Canberra. 1 minute, Dr. Jha.
If the growth rate of the economy, if the trend growth rate of the economy is higher than the rate of interest, then in the long run, debt is not a problem. The growth of the economy produces enough resources to finance the debt, and at the same time, the fiscal deficit for this year and the primary deficit for this year are both down on expectations. So fiscal correction in India is actually going in the right direction, and it is really in sharp contrast to the fiscal correction in many other countries, which are still printing money, and then they are going to create a
anyone else wants to counter? I can't see the rest of the guests on the left.
Somebody,
I think
for some people.
Yeah.
By reducing the liquidity suddenly. So India has the basic problem with the Western view of the pandemic is that they thought it was an aggregate demand problem when it was actually a structural problem. They never understood the fact that it is a demand problem and a supply problem. But the Indian policymakers thankfully understood that right from the beginning.
Two counters coming in.
We have been addressing both of these issues simultaneously. Of course, we are groping in the dark to some extent, but it has been reasonably successful.
Brilliant counter coming in from Canberra this morning. Hands go up. Karan wants to say something here. Yes, Karan. Yes, Karan.
Arnab, I really want to know from Jim Rogers what is the India's debt to GDP ratio according to him, and where the corresponding figure is for China, because he's talking about something without actually looking at the figures and making a statement here without backing up with data. I would also like to educate him about another fact, which just another piece of data that came out yesterday. India's growth rate, the contraction during the pandemic year was 6.6 and not 7.3, which means that even in the face of lockdown, we did much better than what was originally anticipated. And I remember 2 years back also he was criticizing the economy. This is of course before the pandemic struck us, and after that again we had a bull run subsequently. So for how long is he planning to lose out on money making opportunities, and for how long he's going to leave money on the table, just so that we know, so that at least we can continue to make money at his stupidity?
Well, I will certainly concur that I did not own India last year because it was at a high, and now it's much higher. I certainly missed that opportunity, but don't think I don't have other things to invest in. But I am keen on India.
You admit you were wrong. You admit you were wrong. No, Professor Sengupta is laughing out there. You admit you were wrong. Ashish wants to come in. You know, Jim, I don't know. What do you have vested in China, man? It's going down the drain. The world's largest sovereign wealth fund has warned that investors face years of low returns due to the surge in global inflation. But India, Jim, India is the only major economy to be predicted to have 9% plus GDP growth by the IMF. I don't understand. No, even by your standards.
If you get your advice from the IMF, you're going to go broke.
Well, Jim, I don't get my advice from the IMF, but I'm quoting the IMF. You've been saying on the other hand that the world will enter the bear markets towards the end of the year, early 2023. That's what you've said. India is seeing a bull run. Ashish countering you. Ashish countering you. Ashish.
2023.
I think it's important.
This is not 2023. Don't you know what year it is?
I'm saying that you have said that the world will enter a bear market towards the end of this year or early 2023. Wake up, Jim. It's good morning to you in Singapore. Are you still sleeping?
We will see at the end of this year. Yes, I expect a bear market to come again. But we always have bear markets. There's nothing unusual
Ashish of Equipoise Capital countering you from Mumbai.
Let's put it down.
Ashish,
thanks.
You're saying there's no bear market
coming. No, I just want to leave a couple of numbers over here. I just want to highlight a couple of numbers over here. During FY 2020, we had a fiscal deficit of 9.2. It's expected to come down to 6.4 if the LIC IPO goes through. So when you say that, it's the debt which is causing it, I think it's incorrect to say that purely because the quality needs to be looked at. What you are seeing during this entire period is that the capital expenditure has gone up at the rate of 27% in FY 21, despite the fact that it was the peak of the pandemic year. This year also we are running at a capital expenditure over a previous year's higher base of around 30%. And mind you, this is despite the fact that last 3 years we've been missing on the divestment targets. Where is this money coming from? It's purely coming on the back of a strong economic growth which is causing tax buoyancy. So to say that it's some boosters, to say that it is debt which is funding it, just take a look at 3 numbers that I want to highlight. What is the Fed's holding of the GSEC? What is the ECB is holding, and what is the RBI is holding? It's an absolutely low number. So the quality of debt is also important. It is not a consumption-led booster that has been given. It is an investment-led booster that was given. I think that needs to be appreciated. And I think if one needs to really take a look at what is happening, please, I urge everyone, read the Economic Survey 2022.
We'll send Jim a copy.
Fantastic document. If you don't have the time to read the entire document,
we'll send him a synopsis.
Read Sanjeev's article in today's newspaper.
We'll send him a synopsis.
It over there.
We'll send him a synopsis. I think P.K. Basu also wants to counter. Dr. Professor Dipankar Sengupta wants to counter. Yeah. This is a fantastic part of our Professor Basu. Professor Basu, yes, please. Put him on the right path, Professor Basu.
Well, you see, I think it's important to understand. It's important to understand that most of the world went through quantitative easing. There was quantitative easing in the US, massive amounts. There was quantitative easing by the ECB. India did not need to resort to quantitative easing. Monetary policy remained on an even keel. And on the fiscal front, I think the important thing to understand about the fiscal is that last year, the government conservatively took on the FCI's subsidies onto the balance sheet of the government. And supposedly that was supposed to have raised the fiscal deficit last year to 9.5% of GDP. The actual outcome was 8% of GDP, by the way, because nominal GDP grew did much better than was predicted at the time of the budget. This year, we are on track for the deficit to be down to 5.5% of GDP, and perhaps even more, given that we've had tremendous tax buoyancy this year. The full year target has almost been reached by December. The full year target for tax revenue. Now, by December, that is 9th month of the fiscal year, you already have 95.4% of the full year target for tax revenue being achieved. This is the best quarter. The best quarter of the fiscal year has still not come through. January, February, March in particular is a very strong month for tax revenue. So we're going to see a huge outperformance on the against the deficit target. The deficit target is going to be, the actual deficit will be way lower than the 6.8% of GDP projected in the budget. So all of this is important to understand. You know, in the US, the deficit reached 14.7% of GDP last year. 14.7%. So that is a country that has gone berserk in terms of boosting its public debt.
Absolutely.
In India's case, there's been relative restraint. Instead of going for this huge increase in debt, it's important for Jim to look at the numbers. If you look at the numbers, he will notice that India has been an exception. India has not taken the route of massive increases in public debt. Instead, India has undertaken
we take the effort. We take the effort. We all take the effort. We all take the effort to. We all take the effort to educate Jim. But I never lose hope, and I do hope that in the fullness of time, he will see the light. Ladies and gentlemen, the tone of the budget will be determined by the fiscal deficit targets that Nirmala Sitharaman will be setting today. Will they loosen the purse strings in a pandemic situation ahead of an election, or will they choose to put financial discipline on top and tighten the grip on government spending? I say the government needs to spend. Investment is key. Infrastructure investment is absolutely key. I say that. Let's see what happens. Short break. Coming back on the other side.